What is Stone Ridge doing with Bitcoin? And let's break it into two questions. What are you doing as a steward of your own firm's resources? And what are you doing to help others see what you see?
Well, our own resources, what are we doing? I mean, I don't know if you can read the books in the back. There's a lot of Taleb books. We like Taleb. So I'm going to rephrase your question a little bit, which is, Ross, don't tell me what you think. Show me what's in your portfolio. That's a Taleb phrase. Our reserves are now in Bitcoin. It's been true since 2017. And other than what we keep, for convenience, for salaries and rent and things, cash we need, like fiat, our liquid reserves are in Bitcoin. So how did we get there? I think great questions are underestimated. And I think we got there through a great question that our team asked, which is, what do we have to believe to be true to move to the Bitcoin standard? What do we have to believe to be true to move our reserves from fiat into Bitcoin? And our answer was that if we allow ourselves to focus only on point-to-point risk, meaning point-to-point in time from today until our long-dated fiat liabilities are due. And remember, we're a corporation, so theoretically infinitely lived. Of course, we're not actually infinitely lived, but yes, we have salaries and rent next week, but we have salaries and rent in 10 years and 20 years and 30 years too, so we can think about those liabilities. If we just think about point-to-point, the only thing we really have to believe is that over the next 10 or 20 years, that the dollar will depreciate relative to Bitcoin. And I believe that. I have no idea what the dollar is going to do tomorrow, next week, next month, next year, but I have a high degree of confidence, and I voted with my dollars, not certainty, but a high degree of confidence that the dollar will depreciate versus Bitcoin over the very long term, as it has 80% depreciated in the last 2 years, as it has 30% depreciated so far this year. So this insight allows us to ignore US dollar volatility along the way, focus on point-to-point, focus on end-state economics. Now, like anything in life, a point-to-point perspective doesn't make it a risk-free perspective, but it is our perspective. And the net result has been, and I believe will be, enormous competitive business advantages, certainly relative to other firms in our sector and financial services. I mean, for us, everything's getting cheaper, right? So paying rent, paying salaries, M&A, recruiting, it's all cheaper. And the stock market's making new highs every day. For us, everything's on sale, right? So abstracting from Stone Ridge, though, if you take company A and company B in the same industry, one adopts the Bitcoin standard and one does not, just think about the macro environment. As the money printer goes burr, if it continues to, I think it will, as credit creation just continues to explode, as real rates on riskier and riskier assets continue to go negative, and we cross the Rubicon when real rates on corporates went negative recently, consider the implications for the dollar in 1 year, and 2 years, and 10 years. I don't know. Lower? A lot lower? Certainly versus Bitcoin. That's my view. Versus the yen, versus euro. I don't know, but certainly versus Bitcoin. Remember at the very beginning, we talked about every CEO's most important job? Capital allocation. The decision of whether and how to adopt the Bitcoin standard. I believe that will be the single most important decision every CEO makes in the next 10 years. The most important decision, whether they realize it today or not. And I acknowledge well under 1% would acknowledge that's going to be the most important decision they make in the next 10 years, but it will be. And whether they actively make it or not, they make it. They make it with high consequence.
Okay. So the second part of my question is, what are you doing to help others see what you see?
Well, for a while we were trying, and nothing was actually happening. I recently learned how bamboo grows. It's pretty, to me, it's pretty fascinating. It spends its first 5 years building an extensive root system underground and basically doing nothing visible. And then it explodes 90 feet in the air in 6 weeks. That's bamboo. It's not a terrible analogy to NYDIG, Stone Ridge's Bitcoin subsidiary. We started in 2017. We put a great team together. We had a bunch of capital. We worked and worked and worked. We laid our root system. We operated we operated in stealth. It's true that we operated in stealth, but it's almost as if it didn't matter that we operated in stealth because no institutions really cared, and it wasn't for lack of trying. We knocked on a lot of doors. We were just too early. We were just too early, but we kept at our craft. We built our root system. We thickened and strengthened the roots, and we worked quietly, out of view, which is our style. The firm, has had a no press policy since its inception in 2012. But if you fast forward to today, NYDIG is a full service, vertically integrated Bitcoin only financial services firm. The first billion during that dark, challenging 5 years, it took 1,200 days to raise that first billion.
First billion's always the hardest.
First billion's always the hardest, 1,200 days. The last billion took 6.
6 what?
A year ago, we had 25 institutional clients. Today, we have 280 institutional clients. We've got a pipeline in the onboarding process of 96. We can put 75 institutions through the pipe a month. That's our current capacity. We've got over $6 billion in Bitcoin now between what's in the door and what's committed from institutions. And we are vanguardizing this asset class. Best product, best price. And as we scale, we're driving prices down, down, down. Our pricing today is 70% lower than it was a year ago. And by the end of the year, Michael, I am confident we'll have over $25 billion of Bitcoin. I've just got this order book. I'm not guessing. I see what's happening.
Okay, $25 billion. Yeah, that's astonishing growth, and it matches what I suspected, but I didn't know is going on with institutions and Bitcoin. Given NYDIG's role in the Bitcoin ecosystem, you have tremendous visibility into what all sorts of institutions are doing and how they're adopting Bitcoin. So what can you tell us?
Well, I mean, the one-liner is all kinds of institutions are adopting Bitcoin. Public companies, private companies, hedge funds, private equity funds, credit funds. I mean, even investors who, if you asked me a year ago, would they come in? I'd say absolutely not. The most conservative, but also the most sophisticated, most careful investors in the world, AAA and AA life insurance companies, AA P&C insurance companies today have more than $500 million of Bitcoin exposure through NYDIG. And I know for sure, because I'm not guessing, they're just getting started. And these institutions want to do more than just own Bitcoin. That's table stakes. Within a year, America is going to be able to get a portion of their income annuities paid in Bitcoin. Americans will be able to get a portion of their salaries paid in Bitcoin. You want that paltry interest on your CD paid in Bitcoin, you'll be able to get that too. There's going to be an explosion in Bitcoin-driven financial innovation. Another interesting phenomenon we're seeing in our book is exactly 0 clients have walked back their allocation. And that may not be true for other firms, but that's true for us. So once people get off 0, they either stand pat or they increase. Now, I don't want to overstate this. It's been a year, but that's what we're seeing so far. And another phenomenon we're seeing is among family offices. So a year ago, we had 0 family offices. Today, of our $6 billion, $2 billion is from family offices. And the average account size of a high net worth individual is $7 million. So yeah, we serve retail, but the average account size is $7 million.
So the breadth of adoption across institutions and the increasing adoption within a given institution. Shocking, not surprising.
Yeah.
It does seem to be, it's a one-way trade. That's the way I see it.
No question.
You're moving in that direction. So, I don't think of me as a crystal ball, but what does the future of Bitcoin hold? And do you think it's too late to opt in? And I'm interested in, I know I have my opinions, but what are your drivers for the price over the next few years?
Well, I definitely don't have a crystal ball, but I think, at least from a framing perspective, I'll tell you how I think about it. I think about the first chapter of Bitcoin as kind of the Genesis block until, let's call it now. And that's been all about Bitcoin, the asset, which is really the theme of this conference. And what's driving right now accelerating institutional adoption is the view of Bitcoin being de-risked, right? And I think that's why you're just going to see a wall of money. I know it. I have an order book. A wall of money coming into the asset class. So let me put you to sort of frame this out in the mind of an institutional investor, me. Okay, I'll put you in my mind. My partners and I bought more Bitcoin in 2020, last year, than in 2013 through 2019 combined. Okay, and as our fiat businesses continue to inflate and accelerate, which they are, I expect we'll buy more Bitcoin in the next 2 years and than we did in the previous 8. So what's going on? I mean, we're conservative, institutional, professional risk managers. It's what we do for a living, and it's why investors, including the most conservative investors in the world, have entrusted us with $20 billion in our alternative businesses, our non-Bitcoin businesses. And to us, conservative us, Bitcoin is de-risked. Why? Well, when I look at Bitcoin, I see it above $500 billion of market cap. I see millions of people using it every day with a clear line of sight to tens of millions of people using it every day, and then billions. I see 12 years of uninterrupted, safe operation of the network. And when I look at all that, the left tail of the zero outcome is gone. And that is the key observation. So when I talked to institutional investors a few years ago, I would get the question, what's the chance of Bitcoin going to zero? And a few years ago, that was an interesting conversation. Last week, a client asked me, what's the chances of Bitcoin going to zero? I said, what's the chances of Christianity going to zero? Like, it's just not. Like, it's just left. It's left the station. And so remember, at Stoneridge, we are risk managers. We do it professionally. And what you're talking about here with Bitcoin is an extraordinarily asymmetric upside asset. We can debate whether it's good or bad, but I think we can't debate the asymmetric upside to it. It's perhaps the most asymmetric potential right tail asset in the world, in history. And you chop off the left tail, we all know what happens, right? To the mean, it just explodes. It explodes. You chop off the left tail, the mean explodes. And you combine that with the macro environment, the money printing presses running at full tilt. I mean, the blue wave in the US, complete political dysfunction around the world. I mean, for us, at least at Stoneridge, fiat reserves are like a hot potato in our hand. We make them in this business. We can't get them out of our hands fast enough and put them into Bitcoin. We can convert them as quickly as possible. So yeah, we're risk managers at Stoneridge, but we're also capital allocators. You can't eat risk management. You can eat making money in the markets. And we believe in the power of Bitcoin, but if we didn't think we'd make money, we wouldn't invest a penny.